Hi there, welcome to Grain TV. I'm Kevin McNew. It's Tuesday, November 22nd, and the bean market continues to march higher. Let's take a look at Grain Edge's trading platform and see where we close. In Chicago, beans up 11 and a quarter, adding on to yesterday's 20-cent advance, closing above the 1030 mark. That was key resistance, and we'll take a look at that action here in a minute. In other markets, corn up a penny and a quarter, and wheat in Chicago off to, although Kansas City wheat was up too. It was mostly all about beans today. Let's talk first of all about what's going on in China. 2 days in a row, we've seen the Chinese markets really bolstered by strong demand. The soybean market there in Asia was up 38 cents in the last 2 days. Crush numbers for October in China were up 24% compared to the same month last year. So overall, the market in China continues to be red hot. I'm not sure how long it'll last, but on the other hand, it is certainly the driving force right now, even with the very large stocks that we have in the U.S. and the expectation of a big crop coming from South America. Other news out today, speaking of soybeans, soybean oil got a boost thanks to a USDA flash sale announcement this morning, 30,000 metric tons of soybean oil going to China. So overall, corn and wheat continue to sort of be lackluster here. Corn managed to close above 350. We do have options coming to expiration on Friday, so there'll be a lot of attention focused on the D's corn options around that 350 mark. So watch for that on Friday's trade, and especially with a shortened holiday weekend or shortened holiday week, we may have limited volume and more volatility if we get around that 350 mark on expiration. Let's take a look at what's going on in the corn market for basis, and in particular, we're seeing a lot of action in Nebraska. The Western Corn Belt, for the most part, had a very flatlined basis pattern. We saw the Eastern Corn Belt start to see basis improvements quickly out of harvest, but only in the last couple of days have we seen the Western market start to really pick up, and they've been picking up quite aggressively around that Eastern Nebraska area where two major competitors, Cargill and ADM, go head-to-head in that territory. Both of those markets are up sharply, gaining about 15 cents in the last couple of days. It started with Cargill starting to come to the market. They have been bidding below Columbus or ADM in Columbus for quite some time, and they've started to catch up and actually start to throw some shade on Columbus's activity. If we look at the basis map here, what we see is that area that those two facilities are drawing from is growing larger and larger. In blue, you have their drawing zones or their sourcing regions based on market conditions last week. So in blue is where we were last week. You can see in green where we are now after Cargill has really bumped up basis and ADM's had to keep it moving higher as well. Now those facilities are starting to draw from outside of their major territories, ADM getting all the way up into South Dakota, Cargill on the far east side of the state now drawing into western Nebraska or western Iowa. So if you're a farmer or you're a trucker or merchandiser looking to move grain, certainly those facilities are starting to attract more and more bids or more and more grain to those facilities. This will probably be short-lived. There's no shortage of grain out there. So this is a year in particular with ample supplies. I would expect any sort of basis pops like this to be fairly short-lived. So take advantage of those while you can. We at Grain Hedge are always monitoring these situations, giving them out to our clients to help them find those extra pennies in the marketplace. Let's take a look at the action in January beans. Let's start first of all with yesterday's daily chart. We talked about this yesterday in the Grain TV episode, talking about 1030 as the major overhead resistance. We closed at 1021 yesterday, and today looked like we might not make it there because we didn't have much lackluster, or we saw a lot of lackluster buying overnight. No real sort of excitement, but once we sort of got into the day session, we started to slowly grind higher. Let's take a look at the 1 minute bar chart here from the Grain Hedge trading platform, going all the way to the start of the session. This morning, we actually dipped lower for a little bit, getting down to 1017, but we continued to see buying interest. Buyers were underlying this market, not in any sort of meaningful fashion, driving it sharply higher, but once we inched up to that 1030 mark, it was a quick explosion through those stops. We see stops generally in those key areas of support or resistance. And today we blasted through that stop at 1030 really quickly and managed to close above it 1031 and 3/4, the last print on the trade. So overall, it was a good close, still continued underlying support. Our technical alerts platform is suggesting we still got more upside in this market, pointing to around 1040 as a potential target. We called out that target with our technical alerts on Monday. So continue to watch the technical alerts as a key indicator for where the market may go. If you're not a grain hedge trading client, by all means, you ought to take a look at our website, take a look at our services we offer. Like I mentioned, we're offering to our clients grain hedges, 4,500 different grain buyers we're sourcing every day to help you find those best opportunities to truck grain or to move grain. We also offer our technical alerts platform. We have a mobile platform for trading that you can get real-time streaming live quotes, do your trading from. All of this for only $7 a trade. So by all means, visit us online at grainhedge.com, take a demo of our trading platform and see what we have to offer. Have a great day. We'll talk to you tomorrow about EIA ethanol numbers.